Everyone is asking the same question right now. Is the bull run for gold and silver finally over? You've seen the headlines. Prices have been hitting highs we haven't seen in years. But 2026 is looking like a completely different animal. A lot of people are jumping in today because they're afraid of missing out. That's usually the first sign of a looming correction. Look at the charts from the last few months. The volatility is starting to pick up. Does that mean a crash is guaranteed? Not necessarily, but the warning signs are flashing red. Central banks have been buying up physical gold at a record pace. Usually, when the big players are quiet, that's when you should worry. Right now, they are anything but quiet. Silver is even more unpredictable. It's always been the more volatile sibling of gold. One day it's up 5%, the next it's tanking. Are you holding physical metal or just paper contracts? There is a massive difference between the two when markets get shaky. If 2026 brings a liquidity crunch, everything goes down. Even the safe havens aren't immune to a sudden sell-off. Think back to what happened in previous market cycles. Gold often drops initially when the stock market crashes. Investors sell their winners to cover losses elsewhere. That's the trap most people don't see coming. They think gold will go up the second stocks go down. But history shows us there's often a delay. We need to talk about interest rates. The Fed has been playing a dangerous game with the economy. If rates stay high, holding gold becomes more expensive. It doesn't pay a dividend or interest. So why would big institutions keep holding it if they can get 5% elsewhere? That's the pressure point for 2026. Have you checked the industrial demand for silver lately? It's tied heavily to the solar and electric vehicle sectors. If those industries slow down, silver loses its primary engine. We are seeing a cooling trend in global manufacturing. That's a direct hit to silver's floor price. Some analysts are calling for a 30% pullback. Does that sound extreme to you? It's happened before, and it can happen again. The retail market is currently flooded with new buyers. When everyone is on one side of the boat, it tends to tip over. You have to ask yourself what your exit strategy is. Are you buying this for a week or for a decade? The answer changes everything about how you should feel right now. Don't let the hype dictate your financial security. The next 12 months will be a massive test of patience. Let's look at the actual data behind the price movements. We need to see if the support levels are holding. Honestly, the floor feels a bit thin right now. Support levels are usually where the buyers step in. But if those fail, the drop can be fast. Gold has a history of these quick, sharp corrections. Think of it as a pressure valve releasing. Silver tends to drop even faster during those times. Have you ever seen silver lose 10% in a single day? It feels like a free fall when it happens. Most retail investors panic and sell at the bottom. That's exactly what the big institutional players want. They wait for the panic to peak before they buy back in. Are you prepared to watch your portfolio drop 20%? If the answer is no, you might be over-leveraged. The 2026 outlook depends heavily on the US dollar. When the dollar is strong, gold usually struggles. It's an inverse relationship that has held for decades. Lately, the dollar has shown surprising resilience. That's putting a massive ceiling on how high gold can go. You also have to consider the massive amount of paper gold. The COMEX exchange trades way more gold than physically exists. What happens if everyone asks for their metal at once? That's the systemic risk no one wants to talk about. It's a game of musical chairs with bars of gold. If the music stops in 2026, who gets left without a seat? Most people just look at the spot price on their phones. They don't realize the premiums on physical coins are rising. You might be paying 20% over spot for silver right now. That means silver has to go up 20% just for you to break even. Is that a gamble you're willing to take today? Honestly, the math doesn't always favor the new buyer. Look at the mining stocks for a real clue. They usually lead the metal prices by a few months. Right now, the miners are looking a bit sluggish. They aren't skyrocketing like you'd expect with high gold prices. That divergence is a classic warning sign of a top. Mining costs are also going up across the board. Fuel, labor, and equipment are all more expensive now. If the price of gold drops, many mines will become unprofitable. That leads to a supply squeeze eventually. But in the short term, it just means lower stock prices. Do you own any of the major gold producers? Their earnings reports are telling a very specific story. They are bracing for a period of lower margins. That tells me they don't expect the rally to last forever. We are entering a season of high geopolitical tension. Usually that's great for gold. But even war doesn't always keep the prices up. Markets eventually get used to the chaos. They price it in and move on to the next thing. Is 2026 the year the bubble finally pops? Let's look at the historical cycles of the last 50 years. Every major bull market has a cooling off period. If you look back at 1980, gold hit a peak and then crashed. It took decades for it to recover that value in real terms. Could 2026 be a repeat of that specific cycle? The conditions are eerily similar to the late 70s. Inflation was high, and everyone was rushing into hard assets. Then, the interest rates were hiked aggressively. That sucked the air right out of the gold market. Are we seeing that same pattern play out today? The debt levels in the United States are at an all-time high. Some say this makes gold the only safe place to be. But a debt crisis can also lead to a massive deflationary crash. In a deflationary crash, cash becomes king for a short time. People sell their gold just to get their hands on dollars. That's the paradox of a financial crisis. The thing you bought for protection gets sold to pay the bills. Have you thought about how much cash you have on the sidelines? Buying the dip only works if you have the capital ready. If you're already all in, a crash will be painful. Silver usually bottoms out much lower than gold does. It's a smaller market, which makes it easier to manipulate. You see these massive spoofing trades on the futures market. They can drive the price down in seconds to trigger stop losses. Is your stop loss set too tight for this volatility? Many traders get shaken out right before the real move happens. Let's talk about the digital gold narrative. Bitcoin has taken a lot of the spotlight away from precious metals. A lot of younger investors prefer the volatility of crypto. That means less new money is flowing into physical silver. Without that new blood, the price can stagnate for years. Do you think gold can still compete with digital assets? The answer depends on whether you trust the power grid. Gold doesn't require electricity to have value. That's the ultimate insurance policy for 2026. But insurance shouldn't be your entire investment strategy. We are seeing a lot of paper selling in the London markets. Thousands of ounces are being traded that don't exist in vaults. If that trust breaks down, the spot price becomes meaningless. You might see a huge gap between the screen price and the physical price. That's when owning the actual metal pays off. But getting that metal out of your safe and into cash isn't always easy. Who are you going to sell to during a market panic? Local coin shops often stop buying when the market crashes. They don't want to hold inventory that is losing value every hour. You might find yourself stuck with your investment for a while. Is your timeline long enough to handle a 3-year downturn? History says these cycles last longer than we expect. The 2026 outlook isn't just about the price today, it's about the underlying health of the global banking system. If the banks are stable, gold has a hard time climbing higher. Most banks are currently projecting a period of consolidation, and that's just a fancy word for the price going nowhere. If gold stays flat for 2 years, will you still hold it? The opportunity cost of holding metal is a real factor. You could be missing out on gains in other sectors. Look at how the tech sector has outperformed gold recently. Is 2026 the year that trend finally reverses? We are seeing a massive shift in how people view wealth. The younger generation doesn't value physical gold the same way. They grew up with digital accounts and instant transfers. Carrying a heavy bar of metal feels ancient to them. That lack of new demand could be the silent killer for silver. Without the Reddit effect or social media hype, silver drifts. Have you seen the volume on the major metal ETFs? It's been thinning out over the last several months. When volume drops, the price usually follows soon after. It's like a car running out of gas on a long highway. You might coast for a while, but eventually you stop. Is 2026 the year the engine finally cuts out? There is also the issue of central bank digital currencies. If the government moves to a CBDC, gold might be restricted. Some people fear a repeat of the 1933 gold confiscation. While that seems unlikely, it's a shadow over the market. Regulations can change the value of your stash overnight. Are you keeping your metal in a bank safety deposit box? If the banks close for a holiday, you can't get to it. That defeats the whole purpose of having a hedge. We need to talk about the gold to silver ratio for a second. Historically, it sits around 15 to 1. Right now, it's much higher, almost 80 to 1. That suggests silver is drastically undervalued compared to gold, or it means gold is drastically overvalued compared to silver. Which one do you believe is more likely in 2026? If gold crashes, silver will almost certainly hit a new low. It's rare for one to go up while the other collapses. They are tied together by the same macroeconomic strings. Honestly, the sentiment is starting to feel a bit too bullish. When your neighbor starts talking about silver, it's time to be careful. That's usually the shoe shine boy moment for the markets. The smart money is already looking for the exits. They are quietly selling their positions to the latecomers. Are you one of the people buying their bags? It's a tough question to answer honestly. Nobody wants to believe they bought at the top. But every top is made of people who thought it would go higher. 2026 is shaping up to be a year of reckoning for metals. The cheap money is gone, and reality is setting in. The fundamentals haven't changed, but the math has. Are you ready for the volatility that's coming next? Watch the weekly closes very carefully from here on out. The real story is written in the closing prices, not the highs.